Have you ever wondered why, when the Federal Reserve announces they're lowering interest rates to support the economy, housing prices skyrocket by 300%? Why your savings account only earns 4 to 5% per year, but real estate prices surge 20 to 30% annually? The truth they don't want you to know is that interest rates aren't just the simple numbers you see posted at your local bank. Today, I'm going to expose the entire mechanism of interest rate manipulation, the most powerful weapon the banking system uses to control your wealth without you even knowing it. In 2008, the Fed slashed interest rates to near 0%. And the result? Housing prices in America jumped 180% over the next 12 years. In 2020, when COVID hit, they again cut rates to 0% and pumped an additional $6 trillion into the system, causing home prices to surge another 40% in just 2 years. This isn't coincidence. This is an organized plan. After reading this, you'll understand why the wealthy always hope for low interest rates, why the middle class keeps getting poorer, and most importantly, how to protect your assets from this game. I'm going to reveal secrets that only the top 1% of the wealthiest Americans know about how interest rates really work. Listen, before diving into these shocking secrets, I need to tell you straight about a fundamental truth. Interest rates aren't the price of money like they taught you in school. Interest rates are tools for controlling human behavior. Imagine you're playing a video game, and there's someone sitting outside who can adjust the difficulty level whenever they want. When they want you to take more risks, they'll make the game easier. And when they want you to fail, they'll crank up the difficulty 10 times higher. That's exactly how interest rates work. When the central bank lowers interest rates, you can borrow money more easily, you spend more money, you invest more recklessly, and asset prices skyrocket. Conversely, when they raise interest rates, it becomes harder for you to borrow money. You tighten your belt, you sell off assets, and asset prices collapse. Sound familiar? You're not the player in this game. You're just a pawn. But who's moving the pieces, and who decides when to raise or lower rates? Don't believe what they tell you about central bank independence, because the truth is that central banks serve the interests of the largest private banks. In America, the Federal Reserve isn't a government agency. It's a private corporation owned by the biggest commercial banks like JP Chase, Bank of America, and Citigroup. Even though the Fed claims independence, its policies must align with global trends. And when major financial institutions need support, the Fed typically complies to prevent systemic collapse. So who's really controlling global interest rates? It's a small group of banking dynasties like the Rothschilds, Rockefellers, Morgans, Goldman Sachs, and BlackRock. They own or control most central banks worldwide. They decide when to pump money and when to withdraw it. They determine the wealth cycles of billions of people, and they do this through their ultimate weapon: interest rates. Now I'm going to reveal the classic strategy that the banking elite use to harvest assets from ordinary people. They call this the economic cycle, but in reality, this is systematic wealth extraction. During the money pumping phase or baiting stage, the system's strategy is to slash interest rates to extremely low levels of 1 to 2% annually, loosen lending requirements, and have the media start cheerleading with golden opportunity and best time ever to invest. What happens? Everyone rushes to borrow money, real estate prices start climbing, the stock market gets frothy, and everyone thinks they're an investment genius. In America, do you remember the period from 2010 to 2018? Mortgage rates dropped to 3 to 4% annually. Banks were calling you to offer loans. Home prices increased 30 to 50% each year. And even Uber drivers were talking about crypto and stocks. This is exactly the baiting phase, and the truly wealthy, those who know the plan in advance, they start quietly selling off assets because they know what's coming next. Next comes the withdrawal phase, or pulling the ladder, where the system's strategy is to gradually raise interest rates from 2 to 4%, then 6%, then 8%, tighten lending conditions, and have the media start spreading negative news about inflation fears and recession risks. What happens? Borrowers can't make their payments, distressed selling begins, asset prices reverse and decline, and panic spreads. In America, We're seeing this now with rates jumping from 3% to 7 to 8% annually. Banks tightening real estate credit, numerous real estate projects stalling, and people starting to liquidate assets. Finally comes the harvest phase, or the great liquidation, where the result is millions of people lose their homes and money, asset prices drop 50 to 70%, banks seize masses of collateral, and those with cash, the ultra-wealthy, buy everything back at fire sale prices. Then the cycle starts all over again. Do you see? This isn't the natural cycle of the economy. This is organized wealth extraction. You think low interest rates benefit you? Dead wrong. Low interest rates are the ultimate weapon for redistributing wealth from the poor to the rich. How are poor people affected? First, savings lose value with savings rates at 4% annually, but actual inflation at 8 to 10% annually, meaning the money in your account loses 4 to 6% of its value each year. Second, they're forced into risky investments because you can't live off savings interest, forcing you to find other investment channels and losing money due to lack of knowledge. Third, they can't buy assets because home prices rise faster than their ability to save, keeping them forever as renters. What advantages do the wealthy get? They borrow money at low interest rates, borrow $10 million at 5% annually, buy assets that appreciate 20% annually, and net 15% annually on $10 million, which equals $1.5 million per year. They leverage extensively, have $1 million cash, borrow another $9 million, buy $10 million worth of assets. When assets rise 20%, they make $2 million profit. After paying $450,000 in interest, they net $1.55 million profit, meaning an effective return rate of 155% annually on their original capital. They also have inside information, knowing in advance when interest rates will rise or fall, buying at the right time and selling at the right time. Do you see how unfair this is? Low interest rates make the rich super rich and the poor super poor. Now I'll reveal the hidden truths about interest rates. The first truth about real versus nominal interest rates. Banks advertise 5% annual savings rates, but that's just a number on paper. Real interest rate equals nominal interest rate minus inflation. If actual inflation is 8%, then your real interest rate is 5%, 8%, 93%, meaning you're paying money to deposit your funds in the bank. The second truth about negative interest rates, the devil's weapon. In many European countries, interest rates have gone negative to 0.5%, meaning you have to pay fees to deposit money in banks. Why do they do this? To force you to spend money and invest recklessly. You can't hold cash long term because inflation will erode its value over time, forcing you to put money into the banking system or invest in assets. And this is how they control 100% of money flow in the economy. The third truth about the LIBOR interest rate index, the heart of the system. LIBOR, London Interbank Offered Rate, is the interest rate that major banks charge each other for loans. This is the most important interest rate in the world because all other interest rates are based on LIBOR. Approximately $350 trillion in financial products are tied to LIBOR. And whoever controls LIBOR controls the entire financial system. And who controls LIBOR? Just 18 of the world's largest banks, most owned by the dynasties I mentioned earlier. In 2012, the LIBOR manipulation scandal was exposed when major banks colluded to adjust LIBOR to their advantage, earning tens of billions in illicit profits. How much were they fined? About $9 billion total, but their illicit profits were estimated at $500 billion. That's how justice works in the financial system. Let's analyze the money pumping and withdrawal cycle in America over the past 5 years to see how this mechanism works. During the money pumping phase, 2019-2021, the Fed's policy was to cut the federal funds rate from 2.5% to 0%, provide $250 billion in economic support packages, and loosen real estate lending. The result was credit growth of 12 to 14% annually, real estate prices rising 30-50%, the S&P 500 going from 2,200 to 4,700 points, and everyone rushing to borrow money to buy homes and invest in stocks. Warning signs that few noticed were real estate bad debt ratios quietly increasing, major players starting to sell off, and various bubble indicators appearing in multiple markets. During the withdrawal phase 2021-2023, the Fed's policy was to raise the federal funds rate to 5.25% and increase oversight and control. The result was the real estate market freezing, numerous real estate companies going bankrupt, the S&P 500 dropping from 4,700 to 3,500 points, and people starting to sell at losses. Who were the winners? Foreign investment funds buying back assets cheaply, banks seizing masses of collateral real estate, and large corporations consolidating the market. The lesson learned is that this cycle is completely predictable, with money pumping phases lasting 2 to 3 years, withdrawal phases lasting 2 to 3 years, and after each cycle, wealth is redistributed from the poor to the rich. Signs of phase transitions include when media starts talking about inflation fears, when interest rates start rising quietly, and when tightening policies are implemented. Ways to protect yourself include not borrowing money to buy assets when interest rates are low, accumulating cash during the late growth phase of the cycle, and buying assets when the market is panicking. Now that you understand the game, how do you avoid becoming a victim? The first principle is understanding the cycle. When interest rates are low below 5%, don't borrow money to buy speculative assets, accumulate cash, and prepare for the buying phase. When interest rates are high above 10%, this is the time to buy assets because prices have dropped 50 to 70% from their peak, and this is a once-in-a-decade opportunity. The second principle is investing in real assets. Avoid cash because it loses value to inflation, bonds because interest rates are lower than inflation, and bank savings because of negative real interest rates. Instead, prioritize real estate like land and investment properties, gold to preserve value, and stocks of companies with real assets, not inflated tech companies. The third principle is learning to use leverage safely like the wealthy. Borrow money when interest rates are low, buy income-producing assets, and use rental income to pay down principal. For example, borrow $200,000 to buy a rental property, collect $2,000 a month in rent, pay $1,500 a month in principal and interest, and net $500 per month plus asset appreciation. But note this only applies when you have stable income and understand the risks clearly. The fourth principle is monitoring important indicators like Fed interest rates, because when the Fed raises or lowers rates, the whole world follows and other countries must adjust their rates accordingly. The DXY dollar index, because when the USD is strong, other currencies weaken and assets in other countries become cheaper. And debt to GDP ratios, because when this ratio gets too high, crises will occur, and this creates opportunities to buy assets cheaply. The fifth principle is long-term thinking. Don't try to time the market perfectly. Make money quickly in the short term or chase get-rich-quick investments. Instead, invest consistently over 10 to 20 years. Focus on assets with intrinsic value and patiently wait for major opportunities. Now, you understand the truth about interest rates, the ultimate weapon that the banking elite use to control your wealth. The most important things to remember are that interest rates aren't the price of money, but tools for controlling behavior. The money pumping and withdrawal cycle is systematic wealth extraction. Low interest rates are poison for the poor, but medicine for the rich. And understanding cycles is the key to protecting and growing wealth. Where are we in the current cycle? With Fed rates at 5.25%, tightening credit policies, we're in the withdrawal phase of the cycle. This means the next 12 to 18 months will be the most difficult period. Asset prices will continue to decline, but this is also the biggest opportunity in the past 10 years. Those who understand the game are accumulating cash, waiting for buying opportunities, and preparing for the next cycle. What about you? Will you continue being a victim of the system, or will you learn to play by the winner's rules? This system is designed so that 99% of people always lose, but now you know the secret they don't want you to know. Use this knowledge wisely. Don't let them continue to harvest your assets, because it's time for you to become a player, not a pawn. If this video has opened your eyes to the truth behind the interest rate system, please like and share to awaken more people. And remember to subscribe to the channel for updates on the next deep analyses about secrets the financial system doesn't want you to know. Because knowledge is power, and power is freedom.